Is there anything that can drag down the Indian stocks when the whole market is euphoric? Let us try to find out. The GDP outgrows estimates in India in 2024. While everyone in the country and stock market participants are euphoric about this growth in GDP numbers, is there anything to be pessimistic about? The household debt in India is on a rise. The rising household debt in India in 2024 is likely to have the following implications for the Indian stock market. What are these implications? Let us analyze. The sharp decline in household net financial savings to around 5% of GDP could lead to lower household investments in financial assets like. You need to be aware that retail participation has grown well in recent years, but the household debts can drag this down. The increased debt burden and higher interest payments by households may constrain their discretionary spending power. This, in turn, could negatively impact the earnings and stock prices of companies dependent on domestic consumption. The high household leverage, with the debt-to-GDP ratio reaching a record 39.1%, raises the risk of financial instability. A rise in defaults or delinquencies could spill over to the banking sector and broader financial markets, leading to increased volatility in the stock market. The surge in household debt could create a divergence in the performance of the corporate and household sectors. This could lead to a disconnect between the stock market and the broader economy. Such measures as tighter lending norms or higher capital requirements for unsecured loans could be implemented. These regulatory actions could impact the lending practices of banks and NBFCs, affecting stock prices of financial sector companies. These headwinds could weigh on India's overall economic growth. Slower GDP growth and weaker corporate earnings could translate into subdued stock market performance. Rising household debt is a concern as it can lead to reduced domestic capital inflows, weaker consumption demand, and increased financial fragility in the system. Policymakers may need to address these challenges to maintain a healthy and resilient stock market.